Welcome to Phillip Futures Market Watch. My name is Joyce Liu and I'm an investment analyst with Phillip Futures. In November, wheat futures contracts listed on the Chicago Board of Trade experienced a turbulent month. The March 2013 contract opened at 880.25 cents per bushel on the first day of November, reached its high of 929.75 on the 9th, and tumbled close to 10% in a week to reach 845 on the 16th. At month end, it closed slightly above at 863.5 cents per bushel, and the general trend from August 10th is down. What is the December outlook for this third most traded agricultural commodity? In the last crop progress report of year 2012, the U.S. Department of Agriculture reported winter wheat crop condition at its worst in history because of extended drought in the U.S. plains. The percentage of good to excellent wheat was 33%, way below the 10-year average of 56%. This suggests bad year for the U.S. wheat output. In many other major producing and exporting countries, the wheat commodity is also reported to have either lower yield prospects or lower production output. In particular, continued dryness during grain fill in Australia drastically reduced yield prospects. Cool, wet weather during the early growing season in Turkey also delayed development and increased the prospects of lower yields. Furthermore, wheat harvest in Kazakhstan reportedly halved, and yield in Ukraine was reduced by 15%. Hence, production-wise, the fundamentals of wheat seem rather strong. Nonetheless, the strong fundamentals were not reflected in the general downward trend of wheat prices. Apart from a small decline in demand for wheat, the main reason why seaboard wheat prices did not manage to break higher highs is its lackluster export demand. U.S. wheat prices have been uncompetitive compared to its rivals. On average, U.S. wheat exports are about 10% higher than Australian, Russian, and Canadian wheat. But as stocks in Russia, Ukraine, and Kazakhstan are now at dangerously low levels, there are finally signs of U.S. wheat exports picking up. Egypt, the world's largest wheat importer, who has not been buying wheat from the U.S., announced on the 1st of December that it will source 280,000 tons of wheat from the U.S. On this note, it seems likely that other major importing countries such as Japan, Indonesia, and South Korea may start importing from the U.S. too, henceforth pushing wheat prices out of its current trading range. On the technical chart, the 4-month-long sideways movement of the seaboard March wheat futures contract seems to suggest that the contract is trying to find its way out of the range after a strong rally. Given the strong fundamentals, prices may attempt the 920 cents per bushel level in January or February next year. The target level after 920 is 950 cents per bushel, beyond which it may potentially test the May 2011 high of 984 cents per bushel. On the other hand, the shorter-term picture may be slightly more bearish as prices are repeatedly testing the strong support of 840 cents per bushel. If prices make a clean break through the 840 cents levels, it may retrace to 735, the 38% Fibonacci retracement level, before making a rebound. For more information on the risks and returns of investing in agriculture's futures, please approach any representative from Phillip Futures for further discussion. Thank you and stay tuned for more Market Watch videos.